Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Wednesday morning, October 23, 2024, and I'm your host, Sunil Thakker. Sunny Talks Money. Let's roll. Wall Street closed lower on Wednesday as climbing treasury yields pressured mega cap stocks and investors grew less confident about strong rate cuts from Federal Reserve while corporate news pressured McDonald's and Coca-Cola. Benchmark 10-year US Treasury yields reached a 3-month high, with investors reassessing the Fed rate cut outlook over the next few months against the backdrop of strong economic data and upcoming presidential elections. Nasdaq led the US market lower, falling 1.6% or 296 points to 18,276, while the Dow Jones Industrial Average retreated 410 points or 1% to 42,514. The S&P 500 lost 53 points or 0.92% to 5,797. The benchmark S&P 500 had its third consecutive daily decline. Out of the 11 S&P subsectors, only utilities and real estate posted gains. The Russell 2000 index of small cap stocks wasn't spared either. It fell 0.8%. Stocks opened in the red and never looked back during another busy day for corporate results, while all members of the Magnificent Seven falling as earnings season turned towards some of the largest technology companies. Among rate-sensitive mega caps, Nvidia fell 2.81%, Apple 2.16%, Meta Platforms 3.15%, and Amazon slid 2.63%, dragging on the tech-laden Nasdaq. Qualcomm and ARM also posted losses amid a licensing dispute. However, Tesla, the first of the so-called Magnificent Seven companies scheduled to report results after market close, closed down but gained 8% in after-hours trading as it beats profit margin estimates. Semiconductor company Texas Instruments gained 4% after its third quarter profit beats forecast, while AT&T rose 4.6% after gaining more wireless subscribers than expected in the third quarter. Boeing shares fell 1.8% after the company reported its biggest quarterly loss of $6 billion owing to a crippling strike. Chief Executive Kelly Ortberg said on Wednesday that the plane maker needs a cultural change plus a deal with striking machinists. Factory workers at Boeing were to vote later in the day on a new contract proposal that could end the standoff after more than 5 weeks. Meanwhile, AT&T booked a $4.4 billion impairment related to its business wireline unit, but shares rose 4.6% thanks to better than expected earnings. Tesla and IBM were to report after the close. McDonald's tumbled 5.12% after an E. coli infection linked to its quarter pounder hamburgers killed one and sickened many. Coca-Cola fell 2.07% after the company reiterated its annual profit growth forecast, even though it expected higher revenue. Starbucks had losses and ended the day higher despite suspending financial guidance. As of late Wednesday, 10-year Treasury yields surpassed 4.2%, continuing a climb analysts attribute to a still hot U.S. economy and investors bet on a GOP sweep of the White House and Congress. Home sales are on pace for their worst year since 1995. Existing home sales in September fell 1% from prior month to seasonally adjusted annual rate of 3.84 million. In commodities, West Texas Intermediate crude fell 1.1% to $70.98 a barrel. Spot gold fell 1.2% to $2,716.54 an ounce. The Fed Beige Book survey showed U.S. economy activity was little changed from September through early October, while firms saw an uptick in hiring. Key events this week: U.S. new home sales, jobless claims, S&P Global Manufacturing and Services PMI on Thursday. UPS, Barclays earnings Thursday. Fed's Bet Hammock speaks on Thursday. U.S. Durable Goods University of Michigan consumer sentiments on Friday. That's it for today, folks. I will see you tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market. Happy investing, stay inspired, and remember, it is all about money.